Today I'm going to talk about the most common, the most famous, the ubiquitous cup with handle technical analysis chart pattern. Let's talk about why they form, and then let me show you some techniques I learned from Mark Minervini regarding getting into cup with handles. You might be surprised. Let's go beyond William O'Neill's methods and get a little bit more surgical. But what makes a cup with handle anyway? Is it just magic? No, it's human psychology. So here we have one of the oldest, most venerable stocks, COKE, Coca-Cola. And we have a prior uptrend, and then at some point the uptrend becomes exhausted. Maybe there's a change in general market conditions. Maybe there's a piece of bad news that came out. Maybe, or not necessarily bad news, but perhaps an earnings report that didn't meet market expectations. Or perhaps one or more large institutions, mutual funds, decides that the stock is overvalued and they sell. And that drives the price down, and often there's a domino effect. People see the price coming down and they sell to lock in profits, and then those who get trapped underwater panic sell, and the disciplined ones sell for a short loss, and then the less disciplined ones panic and hold and then sell it for a large loss. And that is what causes the left side of the cup. And the left side, as you can see, has generally more erratic. There's more noise, there's more oscillations than the right side. And that's what you want. You don't want a right side that's messy like this left side. So the stock goes down, sometimes for weeks, sometimes for months. And ultimately, the reverse happens. Perhaps general market conditions change and speculators become risk on and start bidding up all stocks. Perhaps there's some good news that comes out with the company. Maybe it's a good earnings report or a new product, whatever. Some good news comes out. Or perhaps one or more institutions just decides that it's undervalued and they begin to buy and they drive up the price, and it stair-steps its way up the right side. And that is your cup. Now, sometimes, particularly with large caps, cup with handles don't form. A stock will break out after just making a cup. But more often, as you can see here, a handle will form. And so two things occur. One, short-term swing traders who bought perhaps right here, when they see it's coming up to the top of the lip line, they sell to lock in their profits. Maybe they sell the whole thing, maybe they sell half. I actually often do that. I'll sell half when it gets up to the lip line. And then the second thing that happens is all of this volume over here is potential sellers, trapped buyers, if you will, who bought up here expecting the stock to go up, and then when it starts going down, they get trapped. And as it comes up, when they hit break even, they begin to sell, especially when it gets up here near the top of the lip line. If you bought here and you rode this out all the way, by the time it gets up to here, you would be thrilled to be getting out at a profit, right? And that creates the handle. So then a few different things occur. Sometimes the stock will fail and meander aimlessly. Sometimes it'll come back all the way down, undercut this, and create a double bottom. Or ideally, it pauses out for 5 or 10 days, and then it breaks out. More good news comes out, or buyers just move in. Usually it's an institution. Well, not necessarily. With small cap stocks, sometimes the retail buyers can bid it right up. But in any case, someone decides to buy, it clears all of this trap supply. And when there's no trap supply, it doesn't take much buy volume to drive the stock up. That's one thing that many people don't realize. They've learned since kindergarten to buy low, sell high. When in reality, buying at a higher right price is often better because you don't have all of this trap supply to the left to go through. And then, as you can see, here are the results. In a bull market, oftentimes cup with handles break out beautifully and run up. The general amount of uptrend is about 25%. Now, sometimes they'll go up 5 or 10%, pull back to the lip line or near the lip line, and then continue to 25%. Coke, as you can see, did not. Now, regarding handles, this handle is actually a little short. What's the correct length? You know, after you look at hundreds of charts, you just kind of get a feel for it. But I would say arbitrarily about 10 days. So this handle, while it worked, is definitely a little bit short. Secondly, this is pretty much a flat handle, and we want to handle the droops. We want, here, let me draw this in. Ideally, we want to see, let's pick a different color. We want to see a handle that droops down about like that. And that shakes out, you know, people sell as things go down. That shakes out more shoe clerks, more short-term, weak hands, so to speak. And then when they're gone, there's no more supply to wring out of the towel, so to speak, and it goes up. Another thing that is preferred, and which we don't see on this cup with handle, is there's no shakeout in the middle. It's really nice to have a little shakeout in the middle of the handle, again, to shake out the weak hands. Let me see if I can find one real quick. Wow, that took a while. I have not found a perfect example for you, but here's a saucer base. This is KGS, and here's your handle. Notice how it has a shakeout here and a little shakeout here, and this actually printed what's called a demand hammer. It went low, and then there was accumulation throughout the day. That's a symbol, the signal that institutions are accumulating, and it's no secret or not coincidental that it bounced off the 50-day. So you want the handle a little bit longer. You want it to droop, and then in a bull market, you buy the breakouts. Now, it's really important that you watch some other cup with handles and determine our cup with handle breakouts working. When they're working, it works phenomenal. But there are times, 2022, for example, when stocks would break out a cup with handles and fail virtually every single time, pull back for 10, 20, 30% loss. Right now, February 25th, 2024, cup with handles are working pretty well. Let's see, two other things about cup with handles. Sometimes the handle will form lower than the top of the cup, and that's fine. You just want it to be 2/3 of the way up the right side or more. Sometimes it'll break out and then sit on top of the pattern for a week or two, and that's fine. That's called a cap pattern, and you just wait for it to break out of the cap. Give it about 2 weeks. Once it lasts longer than 2 weeks, it's really not performing normally. Sorry, I had a little clog in my throat. Okay, now, actually, if you haven't, if you wouldn't mind liking the video, that definitely would help get the video out to more people. And two, don't forget to check out my Patreon. I show my portfolio and focus list every weekend, 7-day free trial. I do a blog post midweek as well. Now let me show you a couple Mark Minervini tips on to get into these things earlier than the O'Neill method, which is just buying the breakout. And you know what? I guess I should also say that this is not investment advice. It's just for entertainment, purely for entertainment, purely for education, just showing you my strategies based on my 28 years trading experience. So William O'Neill says to buy it right here. But two-time U.S. investment champ figured out that you can cheat and get a better price, particularly on the large caps. Cheating works well. What you do, you figure out where the left side ends, all right? And you can add, now you don't do a full position. you could do a half position or a quarter position right here. Now, ideally, it breaks out of this, above this downtrend line, pulls back, bounces off, and then goes. When it does that, it's more likely for the pattern to work. Now, this one didn't do that. But so you put on a half or quarter position here, and then you look for other cheat entries. See this little flat spot? I'll draw that one for you too. See this little flat spot? It's almost like a mini handle. You can buy, you can also buy a breakout of a little cheat area like this. So a quarter position here, half position here. Now when you bought this quarter, you put your stop at 5 or 7% right about here. And then when you add to the position, you raise your stop. And then it comes up. And then if the market is skittish and a couple of the handles aren't working that well, you can sell the whole position when it gets to the lip line, or half the position. Now in good market conditions like right now, you probably just want to hold, and as long as the handle is behaving normally, you just hold through the little minor 5% correction or so. Then when it breaks out, you put on a larger position. So a quarter, a half, full position, and you keep raising your stop. And ultimately, as it moves up, I move my stop beneath the 50-day here, and then I get sell when it breaks the 50-day. In general, there's some other nuances, but that's the general strategy. Another thing to think about is the depth of the cup. This cup is only 17%, and that's great. Ideally, you want the cup to be less than 25%. Now in 2022, the market made a whole bunch of really deep bases, and deep bases tend to fail because more people are trapped on the left side, and more people who bought on the bottom sell at the top. If you are looking at a deep cup, what you want is a lot of oscillations on the right side. Well, here, watch my mouse here. You want a bunch of really noticeable oscillations that are shaking out the weak hands, so that when it gets up to the cup, most of the weak short-term holders are gone. And as you know, there are all sorts of other patterns out there: double bottoms, head and shoulders bottoms, triple bottoms, inverted scallops. I could go on and on. But the cup with handle, we see it over and over again. And if you look at historical chart patterns, cup with handles were being formed 100 years ago. Let me know your thoughts or questions on cup with handles, and if you happen to know of any really good ones on charts right now, if you wouldn't mind throwing the symbol in the comment section, we could take a look at some other good examples. And if you have time, I encourage you to check out my partner, Seeking Alpha Premium. It's an amazing database of fundamental analysis articles, news items, transcripts, all the fundamentals you could ever want, and more. And there's also a feature called, sorry, I just had to sneeze. There's also a feature called 𝗕𝐵, where they use quantitative analysis to pick stocks. As you can see, it is handily outperforming the S&P 500. There are links for Seeking Alpha Premium, Seeking Alpha, 𝗕𝐵, and my my Patreon service in the comments, not in the comments, in the description of the video. I better sign off before I screw this video up too badly. All right, good luck in the markets. Take care.